So let's imagine you've got the property, you've had it for you've got a mortgage on it, you've had it for 15 years, for example. That property is going to be worth a lot more. But you might still have your mortgage. You might still be paying your mortgage off. Could you refinance it at that point to get another property, even though it's got the mortgage on it still?
Banks don't like to refinance something that's already got a mortgage on it.
Right.
So
okay.
So any kind of refinancing agreement normally involves the original mortgage being paid off in some way.
Right. So that's a difference then from what we have in the UK, for example.
Correct.
That's really interesting. People need to understand this stuff, right?
Well, normally you fall in love with a Spanish property. You go through the mortgage application process. You sign all of the documents, and you've got this wonderful beachside villa in Marbella, and then time goes by and no one's ever told you that it's so difficult to get equity out of property in Spain. So your options are very much limited to either selling it, capital gains tax, because you've seen property prices increase by a huge amount here over the last few years. So capital gains tax, other implications on selling the property. And then what can we do? Okay, we can refurbish it. We can get another loan for a refurbishment, or we can invest in another property by getting a mortgage on the first. So options are kind of limited, and people don't often think about that when they're buying a property in the first instance.